What's the latest with the NAR antitrust lawsuit that threatens to compress agents' commissions? What's happening in the local market? What's happening with our industry and what ABoR has been doing? I just sat down with Emily Chenevert, one of my good friends and the CEO of the Austin Board of Realtors, and we're going to go through all of these questions right now. I would urge you to like and subscribe this video for future content because we're putting out a whole new season of the RealtyHack podcast. Okay, here with my good friend Emily. Glad to have you back. I think it's been, how long has it been?
It's been a minute since I've been on the podcast.
3 years, right?
Yeah. Pre-COVID.
Nice. So we'll jump right in. So first of all, what's going on in the real estate industry nationally? What can you talk about that we might want to hear about?
Yeah, I mean, I think it's such an interesting time. Obviously, with the market shifting, everybody's reevaluating their business strategies. Not just agents and brokerages, but associations and MLSs have to think about how we serve our agents differently. I think it's going to be an interesting time for Proptech because I think that different types of technology are needed in a market like this versus the one that we've been in.
Yeah.
Less about efficiency, more about lead gen now and converting leads and intelligence around your buyers and sellers. And so I just think we're going to see a shift across the board in all the tools that are important to you guys. And we have to think about how we provide that differently.
Yeah. Proptech. It's interesting. How have you looked at GPT?
No. Do I need to know?
Oh, yeah.
All right.
Oh my God, I'm obsessed with it.
Yeah. Well, you're so good at workflow efficiency and like creating those automations for you and your team, which I think is important in a market where you have to work harder for leads.
Yeah.
Like you need to make the easy things easy and then spend your time on the business generating activities.
Oh yeah. And like with, Chat GPT, it's like you can do email templates, you can do ad copy, everything.
Love.
It's like that. It's great.
Yeah.
Okay. So when it comes to, like Proptech, which that's an interesting subject, what are you seeing? Like, what trends are you seeing with that?
Yeah, what I think we're going to see, although many of these have been in progress for the last few years, are more social media, more automation in marketing, more automation in digital ads and video content.
Yeah.
It's interesting. I was on a call earlier. As you know, we're owners of Remine, and I was on an operations call with them earlier, and we were talking about like how ready-made real estate is for digital ads.
Yeah.
And just how perfect it is because it's so visually driven. Video is such an important part of marketing and listing now. I think that those things become more important in a market where you have to work harder to get the deal done.
Right.
So my sense is that there's going to be a lot of technology around lead generation and warming that lead and having it be informed, not just this cold, call this person. Using big data and intelligence around buyers and sellers, specifically in the position that they're in within their property or within their financial situation. And then I think we're going to see lots and lots of marketing.
Yeah. Well, it's been a huge focus of ours, and we've been doing a lot with retargeting people and getting them onto our website. That way, and what we found through doing SEO is creating that funnel before they register makes them a much warmer lead.
Yeah. And then I wondered too, like what's going to happen with geo-targeting now that people are working from home so much more and like their place can be more fluid than it was before.
Yeah.
Do you widen the net in terms of who you're targeting, expecting that buyer or seller could come from far outside of your geographic territory, or does neighborhood still matter? It's going to be kind of interesting to see how that stuff fleshes out too.
Yeah. And with geo-targeting, I normally think of like geo-targeting for like sellers.
Yeah, or like there's an open house and I want to target all the potential buyers in that area, so I'm going to expand my digital ad to reach around.
Well, you might know this, but like with Facebook, I think, and Google now too, they don't allow geo-targeting.
Right, you have to go off platform.
Right, but what your workaround to that is you get the list of emails, which you can do on Remine. And make audiences for that.
Yeah. And then Remine will tell you how much equity they've got left in their current home and all of the intelligence you need to find the right lead.
Nice. Okay, I'm going to get to that. Okay,
cool.
that's one of my things on here. But
Okay, what's your take on the Austin market right now?
Yeah, I mean, at the end of last year, things were feeling pretty gritty, and people were not super thrilled with the conditions. And I think part of that is just a reaction to like how quickly it changed from the high that we were on. Like if you're on the Autobahn and you're going 100 miles per hour, 75 miles per hour doesn't feel as fast anymore. 75 is still really fast. And that's the context that I could lay over our market. Our numbers looked stronger than even 2019, which was an incredibly hot market. If I'd asked you in 19 if you were in a good market, you would say yes.
Yeah, absolutely.
But as compared to 21 and 22, at the top of 22, which were just like crazy high and insane appreciation, that context just jaded the way that people thought about the shift.
That's right. And you just have to forget about those 2 years.
They're not real.
They're not real.
37% appreciation in 1 year, which is what happened in Austin, Texas in 2021, is not real.
That's right. And
or healthy.
So do you know off the top of your head from the peak in 2022, how much the market has gone down and since the peak?
I don't know. I don't know off the top of my head.
Somebody told me like 20%.
But that correction, what I do know is that correction looks very much like the beginning of the end of 2019.
Well, right. And so like, if it dropped 20%, like who cares?
Yeah.
I've been saying this forever.
A 37% growth was never real. So if you still net the 17, you're pretty freaking strong.
Absolutely. And that's what I've had a couple spots on the news in the last couple weeks, and what I'm telling them is like the only people that are really going to suffer in this market are the people that have bought a home within 2 years
and need to move.
And need to move, and of course home builders, right?
Yeah.
But other than that, like you have to look at 20. Beginning of 2020.
Yeah.
Right? That's your price.
And from a buyer perspective, while obviously the interest rates are higher and that squeezes your buying power, what you should see is a more competitive landscape to find something that you actually like and not be completely house poor. Like, I worried about the people that were so driven by the competition and the flurry that was happening in the market. How overextended were they to get into that property and beat 18 other potential buyers? And then what happens if their financial situation shifts or their employment shifts? I think there's going to be some fallout from the fury that happened over the last couple of years as well.
Yeah. And I think what realtors really need to remember, the last couple months, last quarter of last year, it sucked, right? But I was looking at my analytics yesterday. From January 1st to the 10th, we have 80% of the traffic that we had all of December.
Yeah, people are feeling buzzy for sure at the top of the year. And I think that's normal in the sense that like December is already a weird time. People want to shut it down for a minute. They want to quiet out. There were election dynamics. What's happening politically has been very extreme. And then the interest rates rose really quickly. So I think the inflation reports coming out at a federal level feel a little better than they did before. I think we're going to see the interest rates settle out for a bit, but they're going to hike again.
Oh, I know. I told my agents yesterday, it's like, because the one thing I've been hearing a lot from agents is like, we got a bunch of people looking. We're going to give them the fence. I said, look, make a video, send it to them right now. We have interest rates have dropped. They're going to go up in about 3 weeks. Right?
And you tell me, we're at 6.25-ish right now.
Yeah. Like you can get in the high fives with a point buy down.
That was an incredible interest rate not that many years ago.
Absolutely.
Like that is a solid rate.
Yeah, I think I had pulled a chart one time. I think like if you look in the last 20 or 30, I think 30 years, the average is 6.
It is true today and will be for a while. It is still cheaper to buy today than it will be tomorrow. Yeah,
absolutely.
And buyers need to recognize that there's, a time to strike on that, and agents need to help buyers understand that. And help them think, with your lender partner about the right way to structure the loan so that you can get into the property you want. Be creative, guys.
Right, absolutely. I know what I was going to ask you about the national scene. I forgot to ask you this.
Sure.
So, okay, you've seen, I think the trend for the past 2020, 21, 22, right? Was disruptor, innovator, right? Like Compass, Open Door, Zillow, all of these big machines that are private equity in them. And, it seems like there's now a room for the little guys like us, right? Like that, it feels like because they're starting to suffer. Are you seeing that? What are you hearing out there? Well, I know Open Door, for instance. I mean, gosh, the CEO got a lot of flack.
I mean, the earnings calls were rough in the fourth quarter of last year, obviously. But, I think that we're going to see some fallout as the market shifts. Business models will shift. And there's room for every model in the marketplace. Truly. And there's a consumer for every one of those models. I think that what agents have to do and brokers have to do is continue to refine what value proposition they're bringing to the table for their client.
Right.
And then target the right people for that kind of transaction. I mean, you bring a level of service that is specific to you. You need to be sure that you're finding the buyers and sellers that expect that and that you're delivering on that when you retain them.
I remember seeing Mike Del Preti, is that his name?
Del Preti.
Del Preti. Okay, yeah. Where his slide from, I think it was like June of last year, or what it was. It's like the top ones were Open Door and Zillow, but they had billions in the bank.
Well, I think iBuying was built on an algorithm of continued growth and appreciation. And obviously, as the market shifted, they had to have anticipated that at some point that high would come back down. But it has an impact on your business, just as it's had an impact on traditional business models. I think it's just who can be flexible enough to accommodate those shifts and stay on top.
Right. And Zillow had the foresight to say, you know what, this isn't working.
They made a change before a significant shift.
Right. Okay, so what's going on with Remine? And to explain it for people that don't know the association
So Remine is now the only MLS platform that's actually owned and operated by investors who are MLSs, who are industry friendly and in the industry. There were 4 MLS partners. It was Austin, Kansas City, Atlanta, and Miami that all came together to acquire the company outright, with a rollover represented by the previous investors as well at the table. And it's exciting when I think about who owns and operates the other technology that you rely on. It's companies like CoStar or StonePoint who have a different financial mindset, perhaps a different mindset as it relates to the industry.
Right, CoreLogic.
You understand, you understand that when we are the owners of technology that you rely on every day for your livelihood, that my perspective is how can I best empower you versus how can I work around you.
Right.
And I think that that's really important for agents to understand in terms of why we made the investment, so that we could rely more consistently on the tech and build out a technology future that meets your needs. And so that we could secure a future, a more robust and modern infrastructure that meets your needs, and secure it away from investors that potentially don't have the same interests as we have.
Gotcha.
Or that you have.
Okay. And so is the adoption pretty good?
We're getting there. I mean,
it's hard, right?
Any tool that's not the core system is always going to be hard. In Austin, we're making investments in expanding our use of Remine. So you're going to see us start to use more of the platform as core service for you guys next year. Or this year, I should say. And so that will start to motivate folks to get over there. But I will tell you this, there's not another tool that was built for farming in the way that Remine was. And in this market, built by agents, by some of the top Keller Williams agents in the country at the time that Remine was created by its 3 founders. They were all agents just like you. It is built around workflows that you understand, and it was built in a market where you had to work. And so I think if ever you were going to think about adopting a tool or trying new technology, I want you to at least try Remine and just take a look.
Well, I remember when we met with them in Washington, D.C. You remember that? That was like, I don't know, 2018 or something?
I mean, it's reasonable to think that your MLS should not look like MS-DOS.
Right?
Like, it's reasonable to think that it should look like all of the technology on your phone, all of the technology that you use in other applications. And, Remine can do that. We've got a ways to go to flesh it out.
Okay, and here's something that I ask pretty much every real estate agent that comes in here, okay, when I interview them, how are you sending out property alerts?
Yeah.
And they say MLS. I say don't do that.
Yeah.
Do you know why?
Why?
Because it doesn't speak to the CRM.
Yeah.
You know, is that something that can happen?
Well, Remind's definitely more equipped for that. In part, there's a cultural issue there. CoreLogic systems are built in a closed box. They're intended to only work with the products that they provide so that they can make more money.
Yeah.
Remind systems are built with an API that allows for broader integration.
Yeah.
So, for instance, in Atlanta, where they're using the listing entry component of Remind, brokers can add listings to multiple MLSs through one backend and through their own systems.
Wow.
So so just as an example of the kind of integration that you're asking for, Remind from a business perspective is far more equipped to address that than a legacy system.
Right, because I mean, what I teach our agents is your CRM is your lifeblood, right?
Yeah.
And so
if they don't talk,
then you won't be able to see. Okay, buyer commissions.
Yeah.
Okay, that's the subject. It's the commission compression and what's going on with that?
Yeah, I mean, obviously the Merle class action lawsuit is driving interest in the way that buyers' representation works in America.
Yeah.
And that has a potential to squeeze commission, possibly. I think the thing that I would tell agents is that having a buyer's rep agreement in place is always a good idea.
Yeah.
It secures the client's understanding of the service that you're offering and their understanding of the commission that you receive.
Yeah.
The other thing that I would say is that being really, really transparent and talking a client through how it works and why it works this way is going to be beneficial to you long term, regardless of how the lawsuit shakes out.
Yeah.
Having a buyer's rep agreement in place is your most secure method of securing your client to you and making sure that they understand the service that they're getting.
Okay, here's what I'd say about it.
Yeah.
Is that the commission is not fucking set. Okay? It's
well,
not.
It's never.
It's not.
Right.
And so, like one of my agents texted me the other day, they said, send him a text from another agent on a listing he had. I guess he did a 5% commission and he put 2.5 and 2.5. And someone says, "Are you really paying 2.5?" He's like, "How do I respond to this?" I said, you respond by saying, first of all, you're violating Sherman antitrust laws, and second of all, you're not being very ethical by representing your client. Okay?
Yeah, I mean, the thing to do is to be transparent.
That's right.
To be transparent with your client, to be transparent with consumers, and to allow consumers to help participate in their own best interests in negotiating commission and negotiating the outcome of a transaction.
And I think people in Austin don't realize is that if you go into other markets, it's not standard 6%. That's not the case. I mean, it's
there's
California's
no such
like
thing as
5.
a standard commission, and it's always negotiable.
Absolutely.
It should always be inclusive of the consumer's interests and what they're willing to participate in. That is always a competitive matter.
That's right. And I don't think whatever happens with that lawsuit, and whatever, consequences come down on us as realtors, I just don't think it's going to be that big of a deal.
I think it's a big deal. I think but I think it's something that people can be prepared for.
That's right. That's what I mean.
By communicating now your value as a buyer's rep, as an agent who represents buyers and works hard on that half of the deal, I think that you're preparing yourself for a potential future where you have to do that even more aggressively.
Well,
get good at it now, so that if you have to do it more later, you'll be prepared.
That's right. And with every crisis comes an opportunity.
Absolutely.
MLS mergers, what's going on with that?
Yeah, I mean, I think we're still seeing consolidation, but here's the thing about that I think agents don't always understand. We can go merge the business and have MLSs combine, but unless you're working with technology that integrates, you still have a really disparate experience. So, it's one thing to say, I want to merge the MLSs, I want all the data in one place. It's another thing to say, I want a seamless transaction end to end, and I want all the technology to work.
Yeah.
And those are two different things, and I think that agents don't always understand that mergers are not the only way to get to that kind of seamless technology and that seamless transaction.
Yeah. But are you seeing MLS mergers?
We're seeing some. I think they definitely slowed down over the last couple of years, but part of that's just being the chaos of the market and our need to represent you guys and manage our growth. I think, certainly we'll still see consolidation. There were 11 MLS consolidations across the country last year. That's lower than the 2 years prior. I think that we'll see more, but remember there are MLSs of like 100 people all over this country.
Yeah.
So when I think about where the consolidation needs to happen, I think about those medium and small tier MLSs that can't provide the level of service that a big one does.
Yeah.
Those need to get expedited. Let's think about the big ones more strategically.
Okay, gotcha. It's so funny that when I was on the board, before I was on the board, and if you look at like how my views have changed from then to now, it's insane. Like,
right.
I mean, and it's the things that people worry about are ridiculous, and myself included. You know.
Well, it's whatever's top of mind that day. I think that's part of being an entrepreneur. I think that's part of working in an industry that changes fast and is sort of volatile. Like, that's why you have people like me who don't do what you do every day, but help represent your interests.
Right.
I can think differently because I'm not in it every day like you.
That's right.
But I need you to tell me what you're thinking about so I can serve you well.
I get it. Yeah. And you do an amazing job on that. What I'm referring to is the complainers.
Yeah.
And like the fear that people have over things that really aren't that big a deal.
Yeah.
Right.
Yeah.
Like years ago with the San Antonio thing, I mean, when I look back on that, it's just like, I don't know. I just don't see it as a big deal.
I think some of it is like, we haven't made change in your business very easy. Like when you've had to move MLS systems or when we have lockbox conversions, those are disruptive things for you guys. And they're disruptive in a business that's already like, right?
Yeah.
And so we have to think differently about how we approach it so that you can be more open-minded about the changes we're bringing you.
Yeah.
So that's on us as much as it's on the marketplace to be more accepting of the change.
Gotcha. So speaking of the marketplace and the change at ABoR, what all have you guys done in the last year that you're proud of?
Yeah. I mean, well, I'll say the last 3 years because it's really been about that long to do this, but we have overhauled all of the internal systems at ABoR so that we can serve you more efficiently.
Yeah.
We've automated your access to systems. So as a broker, you can move agents in and out yourself without having to call me. You can add service or drop service without having to call an agent at any hour of any day. And those services are rendered automatically. We're one of 3 associations in the country that can do, or MLSs that can do that for you.
Wow.
So you can make changes to your business or your agents can make changes to their business at any time, self-serve at your fingertips on ABoR.com.
Okay.
Some of the other things that we've done are to convert the back end of the MLS, so the database itself, so that it can attach to APIs. It previously wasn't structured in a way that APIs could work. The reason that matters is that you want to be able to integrate your CRM or you want to be able to integrate other broker back office systems.
Yeah.
The only way to do that is if the data can be accessible via an API. So we did that in 2020. We overhauled the governance structure, so we've got more opportunities to participate at ABoR that are not just committees and not just those like old school ways of participating.
Yeah.
Bigger events, things like the housing summit that we did last June to really set the record straight on what's happening in the marketplace. This year, actually, at the top of this year, we're looking to hire an economist in-house.
Oh, wow. That's great.
So that we can bring you better market intelligence, more look ahead as opposed to just current state. And more content for you to share with your clients.
Yeah.
So we're really excited about that.
That's awesome.
And then we moved all of our education across 3 different platforms. So you can still come in person for free. Remember, your renewal is included in your dues.
Yeah.
You can do it on demand, which means it's a live class, but like Peloton, you can take a class anytime you want.
Yeah.
That's on ABoR.com. Or you can do it through ABoR if you want to do the app.
Wow.
And all of that's your renewal at no additional cost as part of your ABoR dues.
That's right. Okay. So ABoR dues, those were raised when?
2 years ago.
2 years ago.
And we rolled in the renewal hours for all of your education.
Can we raise them again?
Sure. Let me get right on that. We didn't this year.
I know.
I think we try to be judicious. Like, we still have positive margins, but we're obviously prepared for a potential shift in the membership. I've been asked a lot lately, how many members have we lost? We have lost no members and continue to grow.
Yeah.
And I expect that to continue, frankly. I think it's a business that is attractive to people even as the economy is shifting too.
Yeah.
Austin's an incredibly strong market. I think our growth will continue.
Really? That's interesting because I feel like,
let me say it this way. I also think we're oversaturated.
oh yeah.
But I haven't seen it change yet. And the dynamics that lead to membership growth haven't shifted.
Yeah,
So,
I'd like to see a reduction.
I get that.
And what I mean by that is a reduction in agents that just aren't doing anything.
Yeah.
Which I think naturally will happen because why pay those dues if you're not doing anything?
Maybe, but today, and I only say this because I've had, especially last fall, lots and lots of rumors and gossip around ABoR losing tons of members. That just hasn't happened, but we're prepared for it if it does.
Sure.
From a financial standpoint, we feel very comfortable and confident that we'll make the shifts that we need to make should that happen. But to be clear, we're not seeing it yet.
Yeah, gotcha. Well, okay, so you have when was the big hoorah? What year was that? 2017.
I became the interim CEO in 2017, and then was named CEO in the spring of 18.
Yeah, 18. And I just, I've been so impressed with everything that you've done throughout the years. Amazing.
I have a kick-ass team. I should be clear.
I know. And somebody told me that you're an important person.
Oh, really?
Yes.
I don't know who told you that.
It was on a list.
Oh, that's true.
Was that yesterday?
Yeah, that was yesterday.
Was it Swanepoel?
It was the Swanepoel list.
What number were you?
142.
142.
Yeah.
Right. You were still on the ones where they put the names on.
Yes.
When you get to like 160, they take the names off.
Yeah. So I guess I'm moving on up. But
well, congratulations.
I appreciate that.
That's really exciting.
More importantly, I am so happy to keep working in this market and work with people like you guys who are just innovative and having fun and pushing the envelope. Like, we have a really great marketplace.
We do. I actually really love what I do. I love and especially now that I'm not selling real estate, I really love what I do.
I get that.
Yeah.
Let me say too, it's so good that I want you guys to recognize yourselves too. ABoR launched our annual awards program. So
right.
Nominations are open.
Right. Hold on a second. I was going to show you something. Let's see. So I just found out yesterday that someone nominated me for Broker of the Year.
Really?
Yes.
Cool.
So I'm just gonna, I'm gonna put.
Oh,
this
you're gonna.
here,
Yeah.
And
okay.
And look, when we leave, I'll walk out first.
Yeah. No, it's your peers that vote you, not me. There's a committee, but. Yeah, you're gonna need a few more of those for the rest of the committee, but
no, I was on the committee.
But okay, good. But I am, we're excited to just highlight and honor people who are working hard.
Yeah.
Be it in philanthropic and community service work or production, Broker of the Year.
Yeah.
We want more nominations because we want more people to feel like they're in the mix doing the good work that they're doing. So please do.
And the event is great.
Yes,
really
super
is.
fun. We're going to a new venue this year.
Where?
I don't know that I can say that yet, but it's going to be March 31st is the event.
Yeah.
Super excited. My team works really hard to make it something where we really get to celebrate the success of your industry.
Gotcha. Okay. So
get ready.
Thank you so much for coming here and doing this. We should do it a yearly thing.
You bet. Thanks, man.
Thanks. All right.